Okay, Q&A officially started. Okay, first off, guys, I know the markets have been a little bit crazy, and you guys haven't seen me in a few days because I was traveling for this weekend for family stuff, and I was still on the phone a little bit, so I had Wi-Fi on the plane, so that was cool. And I know everybody is always kind of wondering what's the market doing, what's happening, but the message hasn't changed. Risk is still on the low side. People are not taking any chances. Leverage is very low. Option markets is shit. Nobody's taking any chances whatsoever, and everybody's just playing wait and see. The reason why we started the marketing push on Friday was to kind of give us a little bit of momentum to help us withstand this weekend, which we thought was going to be pretty bad, and it was. Give us a little bit of a pump when we started. In the meantime, we have a correction, but I honestly think we held better than if we did absolutely nothing. And the marketing effort has not stopped. I mean, it started on Friday, but we have a lot of stuff that's gonna go on for the next 2 weeks. This is not just something we did for this particular weekend. And like I said before, there's some articles coming out through Newswire and Yahoo, like more traditional stuff, and they will essentially get picked up over the next few days. So we should see some links to blog websites or stuff like that, where they just copy paste articles talking about Yummy. Okay, so today we're going to talk about a little bit how to assess a project's health. Okay, the few metrics I look, and we're going to talk about BSC Scan because that is really is an amazing tool that offers you a ridiculous amount of information about your project. So first off, you can you go to Yummy or any other project and you can find the token address, and that's the first thing you want to start checking is that contract address. First off, you have, when you go to the Yummy page, for example, you have links that say contract created, that created at this transaction. So that should be the first thing you do is you check when the transaction was created, and you have a pretty good idea how old the project is. And whatever assessment you do for a project that exists for like 6 months is very different than the assessment you do for a project that exists, for 2 days or 3 days. So that's like the number one thing is check when the project was created, get yourself a definite date when it was actually done. In the case of Yummy, for anybody who was interested, it was created on May 1st at 3:10 UTC, so 31 days and 5 hours ago. So this project is officially 31 days old. That's your first piece of information. The other one is, and this is where you need to do a bit of your own work, is track the number of holders that the project has over time. Of course, when the project is new, you can reasonably expect the holder count to go up very quickly. That's just the way it is. But you want to track that number at least on a daily value. And Yummy, of course, had much higher values a couple of weeks ago, like any other project did. But we're still averaging some pretty significant growth. I haven't seen for the last few days, but usually about 500, 600 holders a day. But we used to have peaks of 3,000 or 2,500 a day. So we're definitely a bit slow, but again, so is everybody. And some of them are even losing holders, like net holders per se. Another metric you want to look at is the contract activation. I've got a lot of questions about this one. And essentially, it's very easy. So when you sell your token, whether you do it on Cake or anything else, you need to provide a signature or permission for the swap to use whatever token you're selling at the moment. So when you're logging into Cake and you're trying to sell Yummy, you're going to get the approval essentially for Cake to automatically withdraw Yummy from your wallet. Well, that contract approval is a transaction that can be tracked within the blockchain. So when you go to the Yummy page, for example, and we're in the middle of the day, so pretty active period, but this is something you can also do on a daily basis. You can see that, for example, there's about 25 transactions that happen. Like every time you go on BS Scan, you always get 25 records. So in essence, that's how many transactions, you had 25 transactions happening in the first page that you land on the contract. And we see in Yummy that the last one was 1 hour and 2 minutes ago, meaning we've done 25 contract activations per hour on Yummy right now. So that means that's essentially our exit rate, if you want to call that. Well, technically, we have 25 people per hour who are considering or thinking maybe about exiting the project or at least selling part of their tokens. Now, of course, if you also have a net growth of holders, that offsets that, and that's where the two things balance. If you go to another project, for example, like KuCoin, and I'll go here and they had about 25 activations in the last 30 minutes or 32 minutes. So essentially, they're about twice as much as us. So if you compare the two of them, they have twice as many people considering exiting the process, or at least activating the contract to exit, always partially. And they have about 67,000 holders, while we have about 74,000. So we have about 10,000 holders more than they do. And although they are growing the net holders sometimes faster than us, because when they do giveaways and everything, they do increase their net holders quite a bit. But we have more holders than they do, and we have half the attrition rate. So essentially, we have half the people deciding to leave the project on an absolute basis, despite the fact that we have 10,000 more holders than they do. And this is something, I'm not bashing KuCoin, I'm just comparing the two projects. This is something you can do for all projects and then decide which metric works best for you. Another thing you want to look about so this kind of tells you an idea of how quickly the ecosystem is running and everything. Another thing, and this requires Web3, you can't really do it easily on BSScan, is you want to count the number of non-zero addresses, meaning because whenever people sell tokens, it's pretty hard in Reflect tokens for them to sell the entire balance. You need to kind of go through the network and figure out how many addresses you have that have less than $1 balance, and how many do you have that have more than $1. That gives you an idea. And for Yummy, we had these numbers today. The number of addresses, what was that we had about? So we had 20,103 addresses with less than 30K Yummy, which means we have about 50,000 that have more than one. KuCoin had about 24,920 under one. So in essence, they have slightly more than we do, about 500 addresses more. And again, they have the same, they have less holders, they have more exits, and they have more addresses that have less than $1. So at least on those metrics, which they are worth whatever they're worth, of course they can do a massive marketing campaign tomorrow, and for all we know, they could get so many more holders and a lot of people to enter. Things can change on the dime, but right now that is the picture. And of course, it could accelerate or decelerate, and it could start hurting us. But right now, Yumi is a little bit better on that front. Now, how do you assess also if the contract is safe? So first we'll talk about Reflect tokens, which is the segment that we're working on now. And Reflect tokens are somewhat exceptional because there's a lot of possible exploits within those tokens. For example, today I had a good question about someone who had the project they were interested, asking the questions, and then they went to the devs, and the devs replied, "Oh, we don't have mint function in our contract." And that's true. Some contracts don't have that mint function where they can't mint any more tokens. So that was the defense that they had for not. They still retain contract ownership, but they said, well, we have ownership, but we can't mint tokens. So it's not like we can dump the token. Well, that's not 100% true. So here's what they can do, for example. If you retain contract ownership, which again, Yumi does not, we do not have ownership. But if you do have ownership, you could say, okay, guys, from now on, tax is 99.9%. It's no longer 9%, it's 99.9%, which means nobody can buy, nobody can sell unless they lose 99.9% of their principal. Obviously, that will cause people to panic immediately, and some people will be able to do those transactions where they would lose 99% of the principal, which would then go as a reflect for all other addresses. But then the devs could whitelist a particular address to be exempt of tax. You know, they could have their own wallet or their own marketing wallet or dev wallet to be exempt of tax. And that guy, that address could trade no problem, could buy and sell that token with no problem. So that address would just take their time to empty the liquidity pool. And as everybody would be trying to exit and being paranoid, these massive reflects would be building up that liquidity pool, because remember, reflects go, some of it go to holders, but some of them go to the liquidity pool. So that liquidity pool would be building up, everybody would be panicking, while the whitelisted address would just be selling the token over time and extracting all that panic liquidity. That's like one exploit that you can immediately do with ownership. So changing the tax anytime, or making it zero for a very small interval of time, and then have a bot kind of like just doing all this trading to affect pricing, that could happen too, and that would make a bot operator make a ridiculous amount of money with those movements if they knew that their address was going to be whitelisted for a certain amount of time. So in essence, what it means is when there's contract ownership and reflect tokens, the possibilities for exploits are virtually endless. And people have done a lot of them, and there's still probably many more that we have no idea that could still be incorporated. So personally, if I'm going to reflect tokens, I like to see contract ownership renounced. It's a big, big step in addressing the problem. Now, but if you don't have contract ownership renounced, then you have to make sure you trust the team because again, any of these exploits is possible anytime. Yeah, go ahead. Okay. Any of these exploits is possible anytime, and you just have to be aware of that. The other part you want to see is how many funds does the team own? Because if the team has a lot of funds, then they can obviously dump those tokens at any time, empty the liquidity pool, and just walk away with the BNB or whatever it is. In the case of Yumi, we have less than 4% and used to be all in the hands of Big CEO, but now it's been split between me, Adam, Big C, and Anthony. So Big C now has less than, he has about 2.5%, and all the rest of the group has about 0.6, 0.7. So none of us can really crash the price or make any significant price impact. That's just not going to happen. So the distribution of the tokens is also good. Of course, we have some big whales. We have someone with 25 billion, and we have a couple of other people with 16 and 15. Those people, if they dump, they can cause a significant price event. But with the liquidity that we have, it's not something that will destroy. It will crash the price like 30%, which is like a bad day sometimes, but definitely not something that you can't come back from. So that's the second risk factor is does the team control a lot of funds, okay, or a single wallet that's in the hand of one person that for whatever reason can get compromised or dumped. So we have no problems here. Other projects, that is probably one of the biggest issues is how many funds are in the hands of the team. The other aspect is the LP token. And I get so many questions about this one, and we're going to cover that one in detail. So everybody talks about, oh, liquidity is locked, but what exactly does that mean? Obviously, what that means is there was a transaction that took a certain amount of liquidity and like put it up to a point that it can't be pulled, and the token itself cannot be converted into the base tokens. And that's awesome. And with Yummy itself, on the liquidity token that we have, one of the questions that I have sometimes is to say, well, I saw the transaction of the liquidity pool, and there's only 60 LP tokens over there instead of 90% of the tokens as it should be. Like there's only 60 tokens, there's 450 tokens or something like that, which were used for the that are used for the LP. And I say, okay, good job, in good detective work on your case to find out, that the liquidity pool lock only applies to what is now about 15% of the LPs. But when they locked it at the beginning, when the project started, that was actually like pretty much all of the liquidity of the project. It was like 80 something percent. So where is the rest coming? Why is there another 375 liquidity tokens? Well, they're coming from the charity wallet sales. So if you look at the charity wallet sales in detail, you find out that one of the transactions they're doing there is generating LP tokens, which get generated from the dead address, the 000, and they get transferred immediately to the dead address again. So part of the charity wallet sell goes to Adam for his buybacks and the charity, but part of it goes to generating LP tokens, which increases the liquidity of the system. And liquidity of the system is a really cool thing because right now we have 63 LP tokens who are locked for 10 years, plus 375 who are locked for indefinitely because they're on the dead address. So essentially you have 99% of the liquidity is locked, for 10 years, and 85% is locked indefinitely. And that 85% will continue to grow as more BNB gets added to the dead address, to the LP. And why is this important? It's important because it allows you to exit or enter the project by making a much less price impact than you would otherwise. Because if you enter the project really early on with $1,000 and you move the price 5% at the time, exiting that project now with the same $1,000 would not move the price 1,000%. This is another common misconception that people have is people think that you only move the price X amount the higher the price is or the lower it is. Like if it's low, you move too much, or if the volume is low, you move too much. It's actually the ratio of the LP. So the bigger the LP, the easier it is for someone with a big wallet to move in and create a position, and the easier it is for you to exit the position without moving the market. And if I'm a guy who's looking to buy 50K worth of Yummy, it's much easier for me now to buy 50K at a lower price, not moving the market, than it was even a few days ago, because the LP pool is a lot bigger. So there's a lot of advantages in building up that LP. And when you're looking at a project that could rug pull you, you want to make sure that either the bulk of the LP, and I mean like 80+%, is either locked And you can check that through many ways. You can Google about it. You can see the transaction in which it was locked. There's a website that checks that for you. But if there is no lock, or if the lock is a small percentage of the LP, then you want to see where are the remaining LP tokens. On our case, 85% of them are on the dead address, so we're good. But someone could have wrote this contract in which the LP was actually being transferred to another address, not the zero address, and that person will have control over the LPs. That person can go to PancakeSwap anytime and break down the LP and get back BNB and Yummy, and that would be essentially the equivalent of a rug pull. But we can't do that because the LP is on the dead address, so they're gone. They're never going to be accessible anywhere because the contract generates those LPs and immediately sends them to the dead address and doesn't give them ownership to anybody. So that's another thing you want to see. A lot of projects will say, well, we generate LP with each sale or with each reflect. The second question should be, okay, where is that LP going? Like, is that LP actually going into the dead address, or is that LP going to another address that we don't know who has control of? So that's the other classification. So if you avoid all those three things, which is contract ownership, the dev team owning a lot of tokens, ideally less than 10%. 10% should be like the maximum. And LP tokens either locked in an address, which can be any address, but needs to be locked for a certain amount of time, or in the dead address, then you are good to go. Then for all intents and purposes, there's nothing the dev team can do to steal your funds for Reflector. Just not. Of course, you can have the price of the token going to shit because the developers either abandon the project or do something, or something bad happens. But you can still trade it. You can still exit at a loss, of course, but you can still exit. It's not like you're going to lose 100% of your capital. So those are the three things to see for Reflect tokens. Now, another big question I have a lot is swaps. Like a lot of scams and swaps and people doing rug pulls. Swaps are a little bit more complicated because for a swap to properly operate, they need to retain contract ownership. They need to adjust emission rates. They need to add new pools, add new farms, change multipliers of those farms. So they can't really renounce ownership because that means that their swap will be frozen in time with no new staking pools, no new farms, no new anything. So the way that they got around that is they create a function called time lock, right? And the time lock essentially means I queue a transaction and it takes X amount of hours to be executed, which is equal to the time lock. Most cases, the time lock is 12 hours, 6 hours, or 24. Those are the most common ones. So the first question should be, if you want to put your money in the swap, is you go to chat, and even if you say nothing else, you say, hey guys, how's it going? Hey, do we have time lock function? How much is it? And someone will say, Jesus, for the 10th time, the time lock is 12 hours. And you're like, okay, cool. Then your second question should be, do we have migrator code? And migrator code is essentially something that was incorporated by Cake. And the rationale behind it was interesting, which was, they thought, well, if we want to update the contracts, we can't have everybody unstake from the contracts, break the LPs, and then create new LPs and stake in the new contracts. That's too many steps. So we can just do a function that would transfer the LP tokens from one contract to another. But of course, if they have that kind of power, they can transfer from one contract to one address, and that's the classic rug pull, is using that function. And it's funny that Cake created that function, and they defended their use every single day. But when they did the V2 transition, the V1 to V2 transition that happened a few weeks ago, they didn't use the migrator function because it was such a mess. Like, they just didn't want to take the risk. They didn't want that paranoia in the community. So they actually did ask everybody to unstake the LPs and stake in the new interface, and it was an issue. That's why they still have V1 and V2 liquidity, because not everybody has transferred the contract yet. So it's funny that Cake defended the use of the migrator code, and the one time that they actually should have used it, they actually did not, which is super interesting, because they recognize it's such a clusterfuck of a function. So that's the whole thing. And your second question on those chats for the swap should be, do you guys have migrator code? And they say, no, man, migrator code removed. And more people confirm, okay, you don't even have to know how to code, you just straight take them at face value. If they say we still have migrated, run, or don't invest unless you want to take the chance. Or if they say, yeah, time lock, we don't have time lock, same thing, they can change anything. And when it comes to exploits without time lock, they can do a lot of things, changing the emission rates of the blocks and multipliers. And essentially, they can collapse their own token and empty the liquidity pools that have their own token. The good news is, if they don't have any migrator code, no matter what, and you're only staking stable coins or other coins in their site, you're never going to lose those. There's no exploit that they can do that they're going to collapse the part. You can always do an emergency withdrawal of your tokens and they will hold the value. But if you have their own tokens, the native tokens of the swap, like if you use Ape Swap and you have the banana token, that token can be compromised in a number of ways if they don't have a time lock or if they do something with the ownership. But if you have other tokens like you're just staking BUSD or USDT on their platform and they don't have migrator code, then your funds are 100% safe. Now, when it comes to borrowing and lending, like the Venus protocol or the Ape protocol and everything, on those, there's so many potential exploits that honestly the only thing you can do is trust the team. So only put that on a very big project like Venus, which essentially is docs to Binance. Everybody knows who they are. They are very closely related with Binance. They're never going to do a rug pull per se. You don't want to put your money on the borrowing pool or lending pool anywhere other than Venus. So that's pretty much how you assess a little bit of a project. Like in a sense, for the basics, is for the case of the swaps, is time lock function. Yes. How long is it? If it's 6 hours, it means everybody has 6 hours to review a transaction to make sure it's not bogus. And 6 hours is plenty of time if the group is big enough. But you usually want 24 hours to make sure that everybody has time to review it. And the migrator code is also another one that will, it's the classic one that still exists in a bunch of projects, but there's more and more projects without it. Those are the two ones that you should have. For refract tools, contract ownership, amount of tokens held by the devs, and where are the liquidity tokens stored, either a dev address or an address that is locked for any specific amount of time. And that's pretty much it. So, any questions you guys have on all this? I know this was a lot of material, so if you have specific questions about something, just answer or ask them, and I will mute you or anything like that if you're muted. And there is someone here who wants to speak, allowed to speak. Go ahead, Patriarch.
Hey, Joe. This is probably a stupid question.
Yeah, no worries.
But what is staking and unstaking?
Staking is when you put your tokens on the website. Like, for example, if you put it on the Cake pool, where you can put Cake tokens and you get a yield for another token. So, for example, you can go on Cake right now and you go to their staking, like where they have pools, and you have a bunch of tokens because Cake is like insanely popular, where you can stake Cake tokens, like essentially give them the tokens for how long you want, and you get some yield out of that in another token. Tokens do this to get awareness so that and increase their holder count because Cake is so popular, they're willing to give free tokens to Cake so that people receive them as yields to make their token more popular, basically.
Okay.
Yep. You won't see that often in refract tokens, although in conversations to do something like that with a swap, because there is the case of the tax that needs to be paid. Every time you transfer the tokens to them and they give it back to you, they will get a 9% tax. So they're still figuring out what's the best way to deal with that.
Okay, thank you.
Yeah. More questions? Wait, I'll unmute you guys. Wait a second.
Joe,
Yeah, go ahead.
Joe, I really enjoy your conversation. I'm one of the investors from early on. I come here just to listen to you. Joe, are you recording this? Because I'm in the middle of a work phone call.
Yeah, there was someone who was recording live, I think, and he will send me the file with the audio afterwards for me to post on YouTube.
Okay, if you could do that like last time, that'll be helpful, Joe. Thanks. Thanks for all
Yes,
the
for
good
sure.
work you do.
Thank you.
Okay, bye.
Any of the people are allowed to speak?
Hello,
ahead.
Joe.
Yeah, go ahead.
Yeah, I was wondering, are you gonna use the rise of Dodge as a meme coin to accelerate your business, and like later, if it potentially falls out of style, would you like change your icon or like?
Well, I was like the icon that we have, of course, it pulls a bit in the whole dog, cat thing that's popular in crypto, but we're aiming to be a much more sustainable token. And eventually, right now, the name of the game is sustainability. Like the whole hype thing, we think it's not really helping any token. Like I said before, the MILF token spent 100K to get Adam Ross to shield the token, and they're pretty much back to the point they were before. And now there's a bunch of people saying they got wrecked by the pump and then the dump that happened. we certainly don't want that. Like I've actually been very careful with TikTokers and other people that we have doing videos for us that I don't want the whole hype mentality, 100, 1,000x, because I honestly think that's going to hurt us right now. I want them to focus on the use case, on the tokenomics, and some of the other things I refer to this call with the LP lock and that kind of stuff to say we're a different project.
Great, thank you, Joe.
Yep. More questions?
Hey, Joe, I just had a quick question actually.
Yeah, go ahead.
So I was wondering, surely with sort of the buyback and burn, will hopefully increase the price of the token, right?
Correct. Yeah.
Surely that's relying that demand continues to either be steady or continues to increase.
Yes, of course. Yeah.
Okay, right. So in theory, another competitor could come along though, and could decrease the demand. Or do you think Yummy will have the USP?
Oh yeah, of course. I mean, running into low volume is the risk for any project. I mean, sooner or later you can get to a point that if the volume is really bad across the board and nobody's getting any traction, no project can survive that for a prolonged amount of time. Unless, I mean, the team of course can be around and do their thing, but they essentially have to wait until the market changes. What we're hoping for is that while a competitor can certainly come along, there's no new coins being launched right now, at least not in a decent amount of numbers, because the conditions are so bad, they're not going to get any traction with the initial sales. And if they don't have enough capital to get started, the project is dead before it even began. In some way, it's similar to what happened with the ICOs back in 2017 or 2018, where they couldn't get the pre-sales to be high enough to justify launching the project. So while that is very much a risk, what we are focusing now is we want to create branding around us that's clearly separate from the rest of the market, which means we know our stuff, we got the tokenomics, we're helping people, we have all the things you want in the project, we have the utility that you want to see. Put your money with us. But if nobody is investing in any project, then it's simply not going to be able to continue unless it's one of the projects that has so much funding that they can go on indefinitely. We could handle several months of something like that, but we couldn't handle like several years. But neither could anybody else. What we're hypothesizing is that we can hold on for long enough that some projects disappear, they'll become way, way smaller, and people start gravitating towards us a little bit more, and we get a little bit of that pool. Because we don't need much at this market cap. We really don't need a lot of interest to get a good valuation compared with other projects because we're small, we're just small. But nobody can really fight a prolonged downturn of no volume, right?
Right.
That's basically it. I think that right now our brand awareness is very good. Our Twitter engagement is off the charts compared with last week. I mean, we're getting so many more likes and retweets and everything. We're gaining still like 300 to 400 users every day, or followers on Twitter, which is pretty cool. Our Telegram got hit a little bit. We lost about 100 to 200 people, but others have lost 2,000 people. I mean, KuCoin has lost almost 2,000 people, although they're moving towards Discord as well, so they transfer out the operations. But a lot of projects have lost Telegram users. So we're still doing pretty good, and I think we're being successful with the branding, and we have the listing coming with Bitmart. We have another stuff in the works as well that I can't really share, but there's a lot of stuff in the background with, rocket potential, if you want to call it that, where it can give us a lot of eyes and a lot of attention. And I think the next few weeks are going to be very interesting. So it's all about building the brand and building the holder pool. So
Nice. Thank you very much, man. I appreciate it.
yeah, thank you.
Hey, Joe.
Joe.
Yeah, go ahead.
Sorry,
Yeah, go, Emmanuel.
Now this is a question like based on the one before this.
Yeah.
When the market stabilizes a little bit, do you think you're going to start paying celebrities to like, kind of publicize us?
Yeah, so I think what's going to happen is when the market recovers, the field is going to be a lot smaller than it is now. There's going to be a lot of projects that simply don't have any capital to do anything, and we will. So we're going to be able to, again, throw a few marketing bullets and get Big C, some of his influencer list, to be okay, again, with shilling the coin. And even if we have to pay for those interactions, that's totally fine. But right now, it's just simply not the time because anything you do about that is not going to be sustainable. So what we want to be is we want to be in a position when the market is clearly making a recovery and Bitcoin starts trending towards 45 or something closer to what is the average institutional cost. We want to be in a position that we can capitalize on that. And because then there's going to be, even now, I'm getting DMs from YouTubers and TikTokers offering me some of them offer discounts because they want the whole charity thing and they respect what we're doing, etc. But some of them, if I don't reply for like half an hour, they start dropping their prices 50%, some cases like 75%, because they're simply not getting projects to pay them as often as it was before to for show videos because they simply don't have the capital. So already seeing that that's happening, and these services are being adjusted. So what I'm hoping is that when the recovery comes, we have well-positioned capital to make use of really high-end TikTokers at essentially one half of the cost, because nobody else is going to be looking for their services. And I think that's a very realistic possibility. We just have to not do it now because right now it's worthless, as several tokens have already proven.
Yeah, I totally agree. Thanks, man.
Yep. Yep.
I
Hey,
have
Joe,
a
quick
short
question.
Sorry.
Go ahead, Vivi. We'll save Colin for last. Go,
Yeah,
Vivi.
yeah.
Okay, can you explain to us those sites that you talked about earlier when you tried to explain the possible rug pulls on the projects? You said there are some sites to be verified.
Well, yeah, you have to go through that of making sure they have no migrated code, and there's a time lock function if it's a swap. If it's a reflect token, you should ask, is the contract ownership renounced? And where are most of the tokens? Does the team own a lot of tokens? And then the third question is, where are the liquidity pool tokens? Are they locked? Are they in the dead address? Those are the three questions you should ask for any project. And if any of them is not the right answer, then just know that there's a risk of a rug pull, basically. If they're all in place, then the risk is much, much lower.
And
Okay?
after bccscan.com, do you know any other sites that can verify stuff like that for users?
Yeah, so if you're gonna want to go like really hardcore on getting more information from the address itself, if you Google Binance Chain or Binance Smart Chain Explorer, you get a website like the first one you see is always VSCAN, but you have the Explorer.bitquery. That one has even more information per address, but it's so clunky to use, and it's you really need to know what you're looking for. But that one has a lot of information. But BSC Scan has most of the things you need to assess the contract quality, which is again ownership, how much do the devs own in the team wallets, and where's the liquidity of the token. Those are the three things. And
Okay,
BitQuery
cheers.
gives you that as well, but it has way more stuff than you need than BSCAN.
Thank you.
Yep. Any more questions?
Joe, I have a question. What about Certic?
Yeah. What
Yeah.
about
What about Certic? Like, I know a couple of friends, I told them about Yummy and some family members, and they
Yeah.
wanted to know why, like, they were asking about the audit and they looked for
Oh yeah, sure,
Certic
sure,
and they couldn't
sure.
find Yummy.
Oh
So
yeah,
do
sure.
you know
So
if
yeah,
eventually it would?
yeah, I can answer to that. So Celtic right now has a huge backlog in audits, and that's a company we want to go with, but they're taking forever. So the company we're actually doing now is a company called Quill Hash, which they're also like not as known as Certec, but they're pretty respected. And that's one of the auditors that is on the recommended pool from Bitmart. So that's the ones we're doing the audit with them now. And we're expediting it because of the listing, because it's for Bitmart. So we should actually have some news about that very shortly. Like definitely before this token gets listed on Bitmart. And Quill Hash might not have the same name recognition as Certic, but they're pretty good and they ask good questions. You can check their website, quillhash.com, and you can look around and see other stuff that they've done and previous experiences and all that. So we'll have an audit
Okay.
completed very, very shortly. Yeah, that's actually also a pretty big deal. It comes with a whole listing thing, but I also think it's going to be nice to have a graphic saying, hey, we got audited, passed, good job, everybody. And while audits are very important, it's important to note that if you have no contract ownership like we do, like, it's renounced, the exploits from the developers, it doesn't even matter who was the developer. Like, you can't do anything. Like, you just can't make any changes. So unless there is an exploit that was pre-programmed, which would be pretty complicated to do and pretty easy to spot, or if unless he did something, like an address that's being used, that we already have seen it by now, he can't do any changes. So if the operations is working as it should be and the money is going where it needs to go, that is never going to change. Like, he can't change the charity wallet address. He can't change the tax. He can't whitelist addresses for taxes. He can't do anything because it's renounced. So the audit guys told us that that much and said, yeah, this should be pretty quick because you guys have no ownership. So there's like a bunch of stuff that simply disappeared, right? As far as I'm concerned.
Okay, no, thank you, Joe, and that makes sense. Yeah, because I've been, and I mean, you've seen, I've been going on Twitter and Reddit, and I'm super excited about Yummy. But yeah, when I tell my friends and my family, because they don't see it in Certic, or also like the source being an open source code, they don't see it in GitHub. They're telling me, well, I don't know, and they don't want to invest just because I guess they just don't see
Yeah,
Yummy
but you
yet
can tell them
there.
like if they get a developer, they can deploy the contract into a test net and then do testing. I mean, that'll be a little bit more complicated. They'll be able to see and play around with the contract to see that there's no exploits, which is what the auditors are essentially doing, right? They're
Right.
deploying the contract in a test net, and then they're doing the same transactions that were done by the deployer, and then they're trying to test that contract for any exploits and they'll have a bunch of automated scripts. But I understand, and that's why the audit is an important part. And hopefully, it's going to go without any problems. So far, so good. They seem to be happy with the process. If we have any issues, we'll see what happens.
Yeah,
So far,
thank
so
you,
good.
Joe. Yeah,
Yeah,
once
no
we
problem.
have
Thank you.
that, I think yeah, they'll grow a lot because I guess some people are still kind of waiting for that, and I think it'll be great once we have that.
I
Thank you.
agree. And the issue with Certec is just backlog. I mean, we literally had no response for them for weeks because of backlog. So I don't think it's going to happen anytime soon. Although we will
Okay.
request. Yeah.
Thank you, Joe.
Yep. Any more
Hey, Joe,
questions?
quick question.
Go ahead.
So I'm speaking on behalf of Condom Leader. He asked the question, and I promised that I'd ask you. So he's been saying basically one of the wallets at the high had more. His coins were worth more than the amount of the liquidity pool. So how would that work if he tried to like? How would that affect the price? How would we bounce back from
Yeah.
that? How would that work if he tried to take everything in the liquidity pool? How would that go?
So the liquidity pool, when you dump tokens, which is really what the question is about, the liquidity pool is an exponential function. It's not linear. So it's not like, for example, oh, my position right now is worth $2 million, and the liquidity pool has $2 million. So if I dump this, I empty the liquidity pool and I walk away with 2 million. It's not like that at all. As you're making the transaction, the moment that you add pools to it, the cost increases or decreases for you to be able to do the next transaction. So it's an exponential. And if you dump like $2 million in open market and you have a liquidity pool of about 1.9 million, you probably drop the price like 30% because it will be a single market order, maybe more than that, maybe 50%. It would be a single market order and it would crash the price. But you will eliminate that big wallet. Everybody will get a ton of reflex, in essence, and the charity wallet will probably like trigger immediately or something because of how much money was sent to the charity wallet with one transaction. So just because the liquidity pool is an X amount and the wallet has that amount or more, that wallet cannot by itself empty the liquidity pool. Now, if I have a wallet that is 10 times the liquidity pool, then that means that they can certainly empty like 80 or 90% of the LP. But with a wallet that is about the same amount, at most they'll empty like 40%, maybe, like maybe 40%. And obviously a big punch, but they would lose a lot of money in it because, especially if they're so that's why we only concern ourselves with whales that had a very low acquisition cost because that means they could do that and still be profitable. We're not concerned with the one whale that bought a lot of tokens over the last week or so at much higher prices because if they do that, they're essentially going to lose like 50 or 60% of the investment, if not more. So I doubt that they did that. But if it was someone that had tokens from the very beginning and they earned the money, then obviously they are a risk. But the good news is we virtually ran out of whales with that cost basis. Pretty much all the whales you have now have a higher cost basis of the price we have now. There's only one wallet that has like 2 billion or something that has a lower cost basis than what we are now, and they're probably going to continue to sell. But other than those, that's it. There's nobody else.
Awesome, thank you.
Yep.
Anybody else have any other questions? Raise your hands. I'm not seeing any hands. Come on, guys. You've been asking for Joe all weekend.
Yo,
I
another quick
do.
question actually.
Yeah, go ahead.
So I was wondering, so if the bear market comes, what do you think will happen? Will Yummy still exist and then hopefully gain traction again once the bull market begins again?
Well, we can withstand quite a beating with the current metrics that we have. I mean, we'll be lowered. Obviously, if there's a strong bear market, if Bitcoin goes to like 20K, I think that would be a bloodbath, quite frankly, and we wouldn't suddenly avoid that. I mean, we'll probably drop like 50% if that happened. But I'm pretty certain we could continue to exist. We'll probably reduce heavily all the efforts that we have for marketing and just bide our time. Just buy. We'll probably, significantly reduce donations, significantly reduce the burns, and just say, okay, we're gonna wait. We still have some capital. The team is still committed. Let's wait 6 months and see what happens. But the good news will be, while we all in the team have talked about it and are willing to do the extra mile for this, other teams are literally depending on team funds to get paid and to continue developing and to continue moving forward. And for example, KuCoin had an announcement that they said that they liquidated 100K because it was a listing and to pay the team for the next 6 months. In our case, obviously, we all have returns on investments, and there's a lot of really good people here doing a lot of amazing work, the graphic team, and I can't reasonably expect anybody to work for free for 6 months. We certainly have way lower costs than other projects in that regard, and we will be able to endure. And then it will just be a matter of biding our time until Bitcoin recovers, and we will be in a much less crowded field. And then we'll see what happens. That's all we can do.
Right. So you don't think Bitcoin would crash down to like a very low price for multiple years, like it did between sort of 2018 and 2020?
I think it's very hard. Well, because the difference between this market and the past one is the last one is just retail investment, but this time we had institutions. And a lot of
Right.
institutions that bought above 30K, above 40K, and that's all only the ones we know. So there's a lot of high point. I think that Bitcoin this time is going to be a lot more resilient than last time because last time it went from 20K. It was a spike that lasted almost nothing and then came down to 3K in the space of a year and a half or something like that. I don't think we're going to see that. I think we're going to see probably a retracement we might touch the 20s level, but I think it will be the 30K is going to be a really strong support over time, I think, because it's just I just think it's going to be hard to go below that with all the money that was poured into Bitcoin. Now other coins, they didn't have institutional investment, so who knows? But yeah, that's pretty much where we stand.
Nice, thank you.
Yeah. All right, guys, one last question, then I have to go.
All right, see Todd, you're up.
Hey guys, thanks for taking my question. Joe, just a quick note. I noticed you said that we were going to scale back down on donations a little bit if needed to protect the livelihood of Yummy. So just kind of if you would expand on that, has that been happening? If so, also kind of that leads into sorry, it's kind of a two-part question. That kind of leads into we made the decision to launch this marketing campaign and go hard at it, and I'm guessing they consulted you to some extent about doing that. So do you have some realistic time frame for a Bitcoin market recovery? And if it doesn't recover, is there like a threshold to reevaluate how much we're spending on our marketing campaign?
So right now, behind not even closed doors because we've been transparent, we essentially given the flexibility to admin Big C on all fronts. Like, so the donation aspect, first off, we want to revamp the live stream to make it more engaging, to make it a little bit better, and to kind of move away from just contributing to Binance and actually using the charity donations, to other charities that also have to do with feeding children, so that we can get people related with that charity to tweet about us, to essentially acknowledge us. There's plenty of charities that were started by individuals that have a big Twitter following, and if we donate to their charity, and then they can even join the live stream when we do it, and that will give us like essentially free advertisement. Because right now, us donating to Binance charity is not really helping us with that aspect of getting more attention than we already have. So I think Binance was important for us to gain the trust of the community that we're actually doing these donations and we're sending them to Binance. But now that we hit $1 million, we probably were discussing how we can shift those charity bullets to have a little bit more of impact um, with other charities. So that would be one thing. The other thing would be is you can certainly fluctuate with the amounts. I mean, still, if you donate 20 grand to a charity, 10 grand, 30 grand, that's still very significant. I mean, especially if the market turns on Bitcoin or in general, charity donations grind to a halt, and all of a sudden you're getting so much more from that particular cash. But right now, the big priority is we want to make sure that the tokenomic mechanisms like the burn and everything of that, and Adam having funds in his wallet are kept healthy and with enough that we can still have a decent price, even if supported by buybacks, for us to like use some of the funds in the marketing wallet to do things. So it's a careful balance. But I do think that right now from the charity, we are going to revamp the live stream to make the most use of it, to make it a much more interactive thing where I call in, Big C calls in, there's going to be a background of Yumi, and then an influencer calls in, and it can even be done through Twitch. And everybody kind of has a little bit more of a conversation as we donate, and that's going to be more of an experience. But the amounts, we just have to play it by ear. Look, if Bitcoin crashes tomorrow, we might have to make tough decisions about the amounts we donate and the amounts we buy back so we can buy it all the time and then scale back. But that's every project. We just want to make sure we never get to a point that we say, yeah, we can't keep this going because we simply have no funds at all. And we're not even close to that point, but that's what we're trying to do. Okay?
Yeah, that gives me a lot of confidence that you guys are keeping that front of mind going forward. So thank you.
Yeah, at the end of the day, the ecosystem needs to be sustainable, right? And the donations themselves are important, but they're not necessary to keep the ecosystem going versus the burns. The burns is what kind of maintains the price floor, reduces the entry cost to everybody, and kind of maintains the interest in the token as a holder perspective. And if we have to like stop one versus the other, it's a tough decision, but what are you going to do? I mean, we can't, you have to fight the market with the tools you have. So we're just very aware of it, and we're always discussing it. So everything
it's
is on the
very
table.
long-term perspective, so it's appreciated.
Yeah, and it's paying dividends because I already had some TikTokers and people contacting us that when I tell them that I don't want any hype, I don't want any pump 100x, they actually appreciate that messaging because they're trying to diversify their own messaging. I had one TikToker that has about 300K followers where he almost gave us the service for free because he wants to really attach himself to projects with longevity instead of pump and dumps, because he notices a shift in his follower base that they start to giving him a hard time for just showing bullshit projects. But he's a crypto guy, so he has to do it, right? So we're getting some gains from this strategy that are not tangible in the price, but they're certainly there. So. Okay,
Cool,
guys.
thank you very
I think
much.
that's all I have. Yeah, thanks, Todd. Hey, guys. So Q&A will be every Monday, every Thursday around 5 p.m. EST. Okay, I know that today is Tuesday, but that's because I was traveling. But moving forward, that's the timeline we're gonna aim for.